Thanks so much for watching this presentation. This is part 2 of 3, where we are showing you how to hack HR in 3 weeks. Our previous presentation was on sexual harassment in the workplace and making sure you can identify it, deal with it, plan for it. And our third in this series, this Hack HR in 3 weeks, is going to be about performance management. What is the best way to provide performance reviews, how to use the information, etc. But today, we're focusing on a fast overview of some of the crucial changes related to HR in 2018. And we just want to help you make sure that you're legally compliant for both this year and, even starting to prepare for next year. So my name is David Friedman, and I'm joined here by my colleague Stephanie Quinn. And Steph and I provide day-to-day HR support to our clients, including matters such as legal compliance, policies, procedures, handbooks, benefits administration. Basically, if it's an HR issue, our phone rings. And at the end of this presentation, we're going to have a quick overview, a little bit more about what we do. So let's start with a completely non-controversial topic, which is drugs and the workplace. So, let's get into it. And Steph, what can you tell us about this?
First, we'll start off with marijuana in the workplace. Given how much you hear about the state level legalization of marijuana, it might bear reminding you that on the federal level, marijuana is still illegal and is treated as any other illegal substance. Of course, it is becoming more and more common for marijuana to be legal on the state level, and now that there are entire industries building up around this product, we are having some state laws that are coming into place. So in fact, at the state level, recreational marijuana is legal in Washington, Oregon, Nevada, Alaska, Colorado, Maine, Vermont, Massachusetts, and California, which just went into effect on January 1st of this year. Medical marijuana is legal in New York, and the likelihood that recreational use could be coming soon seems pretty high, no pun intended. And overall, the latest statistics show that 64% of Americans do support the legalization. So what does that mean for employers? If you have an employee that is a certified marijuana patient, it is considered a disability, and employers are not allowed to discriminate based on their status as a marijuana patient. And they will need to be making reasonable accommodations for those employees. However, that doesn't mean that employees can violate policies that prohibit working while under the influence of a controlled substance. So random drug testing could be an option for your business, but there is no way to know the extent of an employee's impairment, since marijuana can take a long time to clear out of a person's system. Either way, you need to have a clear policy in place for dealing with marijuana, particularly in states where it's legal.
All right, and dovetailing off of marijuana, let's talk about prescription drugs, and because we can't forget that is something that we still have to grapple with, and now more than ever. Latest statistics show around 50% of Americans are taking at least one prescription drug, and as of 2017, 115 Americans die every day from an overdose of opioids. And we're not just talking about, quote, drug users here. Many of these users got these drugs prescribed to them legally and for legitimate reasons. So, you can and should have policies in place that let employees know the rules about use of prescription drugs in the workplace. And just remember that, just because they're legally prescribed doesn't mean your hands are tied, but it also doesn't mean that you don't have liability. So let's talk about everybody's favorite subject, taxes. Unless you've been on a media diet recently, you probably heard about the federal government passing a tiny set of new tax laws, and they have implications for businesses with the potential to be both positive and negative. No one quite knows the full extent yet, and the same goes for employees. We're not going to get into politics here. So the fact is that these laws are now in place, and we have to deal with them. So let's do that. So how do they affect your business? We're going to quickly run through a few of the implications, starting with withholding changes in W-4s. The withholding tables were released recently, and you should already be using those. and the W-4 is still the same, but of course the withholding tables are different. So your employees are now seeing the changes in their paychecks, and they may be now coming to you or they may start coming to you to wanting to change their W-4. So for the moment, you keep using the 2017 W-4, but be on the lookout. Pretty soon, we're going to be getting another. Commuting, maybe that's the second favorite subject everyone likes to talk about after taxes. Employees are receiving a slight bump in the amount of pre-tax dollars they can spend on qualifying transportation and parking. Employers, however, are losing a benefit they previously had, which was the ability to deduct this pre-tax money from their payroll taxes. So, in locations where offering commuter benefits is the law, there's really nothing that can be done here. But elsewhere, employers, if you're thinking of removing this benefit because you've lost the benefit, you might want to just think about the message that you're giving to your current employees as well as to possible future employees.
There is a new federal tax credit for employers that offer paid leaves for family or medical leaves to their employees. This could potentially increase, for instance, the number of employers who provide paid maternity leave to employees, and that's in states where paid family leave is not a mandate, which is most. We also have a few fringe benefit changes as well. So moving expenses can no longer be deducted by the employer, and employees can no longer exclude the income from their own taxes. Employers may no longer deduct the cost of providing on-site gyms. Employees, however, may continue to exclude payments for gyms from taxable income. And finally, employers may no longer deduct the cost of expenses for meals, but employees can still exclude from taxable income. So in 2026, employers will no longer be able to deduct the cost of on-site food facilities. So let's talk about changes to state and local laws that affect businesses. We have 18 states this year that increased their minimum wage on January 1st, and that includes New York, but we'll have more on that in a moment. Employers in California can no longer ask candidates their previous salaries. This is the law already in New York as of late 2017, but we all know that already. And Nevada will grant up to 160 hours of paid leave for employees. And then Vermont employers cannot ask candidates for social media information, which gives employees some social media privacy.
All right, focusing on sick time. A lot of our clients are in New York, so we spend a little bit more time in New York in these presentations. If you have a company in New York City, you already know that New York has a sick time law. But this year, as of May, it's going to be amended, and it's including what is known as safe time. And safe time is time off needed for a victim of domestic violence, sexual offenses, stalking, human trafficking, or caring for a family member that has been a victim of these crimes. So that's coming up in May. Minimum wage laws, they are always changing, of course, and you of course are already providing your employees with the right levels for 2018, and especially if you whatever payroll system you use is I'm sure was automatic on that, but it's never too early to start preparing for 2019, and you can see here that we have the schedule laid out through 2021, and we're already helping our clients to sort of look ahead to 2019 to determine as early as possible the change in their financial liabilities based on the changes to minimum wages. So it's never too early. Paid family leave, we're gonna touch on this very quickly, and then we're gonna get deeper into it. This is for New York. It's called PFL, and it began in January of this year. And it currently offers employees 8 weeks of leave at 50% pay, and that's gonna increase as time goes on. So why don't we get into that? This brings us to our deep dive topic for this presentation, which is paid family leave. So first, we're going to look at the federal level. Steph.
On the federal level, there is currently no paid family leave law in place, but there is still FMLA leave. The Family and Medical Leave Act allows employees to take 12 weeks of job-protected leave, but that is unpaid. So remember, we just mentioned earlier that the new tax laws provide business tax advantages if you provide some sort of paid family leave. when you're not required to by law. But this year, New York State put their paid family leave law into place, which now joins California, New Jersey, and Rhode Island. Washington, D.C. passed a bill in 2016 that they're going to be starting to offer paid family leave, and it expects to begin in 2020. So we can only imagine what other states are going to be joining these states as well.
All right, we want to take a quick tangent to talk about paid family leave and Walmart. The big news this year was that Walmart is joining the list of larger companies that are offering their own version of a paid family leave. Theirs is 10 weeks of maternity leave for birth mothers and 6 weeks of paid parental leave for the non-birthing parents. A controversial aspect of this new policy is that 60% of Walmart employees are part-time, and this new benefit is not going to apply to them. An upside to look at is the fact that a company that employs 1% of the U.S. workforce is now offering some form of paid family leave. So clearly the tides are turning in this direction. And one last side note, kind of tangent related to how companies are paving the way for change in HR. You may have heard that Amazon, JP Morgan, and Berkshire Hathaway are creating a private health insurance for their own employees. Assuming this works, and there's little reason to think that it won't, this could be really big news for employers and employees in the future. Are we going to be buying group health insurance plans through our Prime account? I guess we're just going to have to see. So continuing our deep dive, we are now going to concentrate on New York's paid family leave. And so we're going to take a special look at that now.
So New York Paid Family Leave, or PFL, it's very similar to FMLA in many ways, but one, it cannot be taken for an employee's own health condition, but we'll have more on that in a minute. We are already there, folks. It was implemented. It started January 1st. It will continue to grow over the next few years, and employers could have started taking employee deductions as early as July of 2017. By 2021, New York State will offer 12 weeks of leave at 67% of the employee's weekly wage. Companies that are responsible. This is a little bit different from FMLA because private employers with one or more employees are required to participate in the New York paid family leave. Public employers are not responsible, but they can opt in if they choose to.
All right, and then we're talking about the actual employees. Who is actually eligible? And it is both full-time and part-time employees. It's just changes in terms of how many hours a week they work and how long they've worked for the company in terms of when they become eligible. All right, and you might be wondering, what is this costing your business? And the answer is nothing. This is employee funded. Like Steph mentioned, you could have actually been taking deductions as of July of last year to pre-fund the program. It's all done through payroll deductions. The short-term disability carrier you already have for your New York State short-term disability will seamlessly handle this. So while you actually cut the check to the insurance company, your employees have already provided the funds for that. And Steph mentioned earlier about how much employees are going to be getting paid this year. Once they're on paid family leave, they get 50% of their weekly wage. So obviously, if someone gets $1,000 a week, they're going to get $500. However, there is a cap on how much an employee can get paid, which is, believe it or not, $652.96. So these are just the numbers for 2018. There's a chart mapping them out for the future, and you can see that by 21, we're going to be talking about 67% benefit.
There are some differences between FMLA and paid family leave. We know that paid family leave is paid, obviously, and FMLA leave is unpaid. FMLA, you get 12 weeks of leave, while PFL is at 8. And can only be taken in full day increments. Like we discussed earlier, employers with one or more employees have to offer PFL. And while both leaves cover the birth of a child, there are some differences between the two. And then the differences between short-term disability and paid family leave. Short-term disability is a medical-based leave. That's for disabilities that happen outside work. And pregnancy is the most common type of short-term disability leave. It allows birth mothers to take paid time off from work to recover post-birth or for pre-birth medical issues. Mothers and fathers can both use PFL, and they have up until the child's first birthday to use their 8 weeks. So let's take a look at a few examples. The first example is of a mother. She starts her short-term disability after she gives birth, and the doctor certifies her disabled for 6 weeks. So her 6 weeks and her 12 weeks of FMLA overlap. And then after her short-term disability runs out, the mother will start her paid family leave, which is at 8 weeks for 2018. So that comes to a total of 14 weeks of leave, and then the mother would return to work. In our second example, your FMLA and your short-term disability is still running concurrently, but in this example, the mother has been certified disabled for 8 weeks, which is still common, and she decides to take the rest of her FMLA leave unpaid. Because the mother has the option to use her paid family leave up until the child's first birthday, she can start her paid family leave after her 12 weeks of FMLA runs out, and that would bring her to a total of 20 weeks of leave.
And before we did this, Steph was saying she had a bunch of other case studies kind of starting to lay out, and it got really complicated, and we decided to just go down to 2. And that's what led us to talk about the fact that, tracking leaves was already a puzzle to be solved. And now it really is like a Rubik's Cube. There are so many options to get from point A to point B now. So it's a great benefit, and we're really happy that it's being offered, but it does absolutely make things more complicated.
And finally, we have some things that you should look into right now. So we want to make sure that your drug policies are up to date. Any tax law changes that affect your employees are being communicated. You're in compliance with the new minimum wage, making sure that your employees are paid correctly. And then for our New York companies, making sure that you are providing paid family leave and to make sure employees are paying into it, unless you are ready to cover the cost yourself.
Okay, we mentioned at the beginning we'll talk a little bit more about what we do here at PEAR. And in relation to what we've been talking about today, of course, we provide legal compliance guidance. We can update, create your policies, your handbook. We can make sure that they're legally compliant. We also provide human resource support. We can help you with one project, or we can become your entire HR support team, whatever you need. As well as we can help with hiring, leadership development, team development, employee engagement, and morale, and the like. So remember, please check out our previous presentation on sexual harassment in the workplace, making sure you can identify it, deal with it, and plan for it. And our final in this 3-part series is going to be about performance management and providing performance reviews and actually really trying to get something out of it. So thank you once again for watching this, and we will see you next time.